Today, I want to propose a strategy I call one stock, different multiple accounts. When we do a strategy, we have to make sure that your strategy match your objectives. So what are the objectives then? First of all, don't act like a gambler, because a gambler has no strategy. And the second thing is very simple: buy low and sell high. But there's a catch here. Very often, or most of the time, you are wrong. You make the wrong decision. Why? Because, let's face it, you lack insider information. The information you are getting is either irrelevant or out of date. That's why you are wrong most of the time. When you buy, you have to think about play long-term and short-term, both. But when you just play long-term, all you do is wait, come what may, and that is not very good. Besides playing the long-term, you have to play the short-term too, because there are short-term fluctuations in the market. And if you don't play the short-term, you are losing that opportunity. While you're waiting for the long-term gain, if you think about short-term, you have the opportunity to think about rescue and recovery. So this is a strategy. What do rescue and recovery mean? If you cannot rescue your actions, or if you cannot recover from your buys, what is the point of going into stocks? There's no point. One part of my proposal is to buy just one stock or two, and this is for affordability purpose. As you know, you cannot afford the word diversification. This is just the jargon of a lot of experts. They emphasize diversification, but how many stocks can you buy? Let's face it. You can do diversification through mutual funds, but I already told you my reasons that mutual funds are no good. And if you want to refresh your memory, just view my video number 3. Granted that you can diversify when you encounter a downturn like what we are having now. You have a diversified loss because everything you buy is coming down. You look at all the stocks, nearly all of them are coming down. So when you are diversified, it's just as bad. Now, what is the good thing for buying just one stock or two? Because if you concentrate on just one or two stocks, you get a time to follow them closely. And when you do that, you also can afford to do some rescue and recovery work. Let's see what the rescue and recovery mean. Case 1. Let's assume that there's a bottom for the stock that you buy. It doesn't go down to zero, because if it goes down to zero, there's no purpose of talking about it. But you cannot see the bottom, so that is the problem here. Okay, in that case, you start with the batch number 1, 2, or 3. That means you buy 3 times, for example. You don't buy that many all at once. You just buy 3 times at different times. Batch 1, you buy 200 shares at $10. And tomorrow or the day after, it goes down to $8. You buy 300 shares. That will be batch 2. And then later, when it goes down some more, batch 3, you buy 400 shares, $6. So you buy 3 times different shares each time at different prices. And you get a total of 900 shares in your account. And when you compute the average cost, it only costs you $7.6, not 10, and lower than 8. And in fact, you're getting a lower average cost. In that case, you can say that batch 3 rescues your batch 1 and 2, because when you buy your batch 3 at 6 and you wind up with 7.6 total cost. That means it's lower than batch 2 and batch 1. So it helps. And conversely, if we just think about that the stock doesn't come down, the stock goes up. If the price goes up, you can still continue to buy batch 1, 2, 3 in sequence. In that case, the lower batch that you buy at a lower price always helps the higher batch. Now we come to case 2. In case 2, we assume that the stock fluctuates within a certain range. In that case, you still do the batches of buy and sell. You buy a batch when the price comes down, and you short sell a batch when the price goes up. If you want to know more about short sell, please go to my video number 11. Now, when you have a buy and a short at different places, you can profit in both directions wherever the price moves. But you have to keep the batches different so that you know how much profit you make. Then comes our next question. How do you keep the batches separate? To keep your batches of the same stock separate, you have to open multiple accounts, because this will give you the flexibility. Why? You look at all the accounting methods in your account, they use the FIFO. FIFO means first in, first out accounting method. This method is very rigid. Why? Because it means that when you buy batches 1, 2, 3, for example, in this order, in this sequence, you must sell them in the same sequence. You cannot sell number 3 first. You have to sell number 1, then number 2, and number 3. Let me give you an example. We just cite the example that we used before. Suppose you have bought 3 batches, 1, 2, 3. And these are the shares in the different batches, 200, 300, and 400 shares, and the share prices. First one at 10, 8, and then 6. And you bought this at different times. And if you open multiple accounts, you can put them in different accounts. You can put batch 1 in account 1, batch 2 account 2, batch 3 account 3. In that case, you can sell whichever batch you want. You just go to the account that you do. If you go to account 3, you sell the batch that you bought at a lower price. You go to account 1, you sell it at a higher price. That cost you. So this is what you do to increase your flexibility. Suppose you have bought all these 3 batches and the price goes to $8 and you want to make a profit. All you need to do is that you go and sell the batch in account 3 first, and after you sell, you recover the cash from that account and you make $800 profit, because you've got 400 shares in that account and you gain $2 for each share. That means a total of $800 profit. In this case, you can recover some cash of your total investment without touching the other 2 accounts. The other 2 accounts, you just wait for the price to rise some more and then you sell them. Now, this is regarding buys, but for short sales, you do the same way. You have to use a dedicated account for shorts. Why? This, besides helping you with the flexibility, it also makes things less complicated, because you don't want to confuse yourself when you long and short the same stock at the same time and in the same account. So it's better to separate them, all the buys in one account and all the shorts in another account.